Welcome back to Reflections Unfiltered. Today, we're diving into a topic that's been quietly, well, maybe not so quietly, reshaping the global financial landscape, China's dramatic pivot away from US treasuries. Now, if you've been following the numbers, you'll know that China's holdings have dropped from about $1.3 trillion in 2013 to, just over $750 billion projected for 2025. That's not just a blip, that's a tectonic shift. And it's not just about numbers on a spreadsheet, it's about strategy, risk, and, honestly, a bit of financial theatre.
Yeah, Nikki, and I think it's easy to get lost in the abstraction of billions and trillions, but this is really about China defending its currency, diversifying its risk, and, let's be honest, sending a pretty clear message about de-dollarization. I mean, when you see a country unwind its position in US treasuries at this scale, it's not just portfolio management, it's a signal. It's Beijing saying, well, we're not going to be as exposed to the dollar as we used to be.
It's a bit like watching a chess match where one player quietly swaps out their pawns for knights, while the other's still fussing over the opening moves. There's a poetry to it, except, of course, the stakes are global liquidity and the future of reserve currencies. But Nikki, you once mentioned photographing a Hong Kong trading floor during a yuan devaluation. What did that moment feel like, on the ground?
Oh, that day is burned into my memory. The air was thick, almost electric. You could see the tension ripple across the room, traders hunched over their screens, eyes darting between the yuan's plummet and the US dollar index. I remember this one man, suit jacket off, tie askew, just staring at the ticker, his knuckles white. It was more than numbers. It was the weight of uncertainty, the sense that the ground was shifting beneath their feet. And that's what this whole pivot feels like to me. It's not just about defending the yuan or hedging bets. It's about China carving out breathing space, refusing to be boxed in by the old rules.
And that breathing space is strategic. Currency defense, sure, but also risk diversification. If you're sitting on a mountain of treasuries and the geopolitical winds shift, you don't want all your eggs in one basket, especially when those eggs are denominated in a currency controlled by your main rival.
It's almost alchemical, isn't it? Turning financial anxiety into leverage. And as we've seen, this isn't just about China's internal stability, it's about sending ripples through the entire global system. The old dance between East and West is getting a new rhythm.
So let's pull back and look at the bigger picture. China's financial moves aren't happening in a vacuum. What we're seeing is a growing detachment from US-centric trade and finance. The US used to be the gravitational center, right? But now, with China stepping back, the orbit's getting wobbly. For Washington, this means higher capital costs, more strategic vulnerability, and, let's not sugarcoat it, a real challenge to the dollar's dominance.
And it's not just about economics. There's a psychological edge to it. When China sells off treasuries, it's not just shifting assets, it's shifting the narrative. It's saying, we're not playing by your rules anymore. And that, in itself, is a kind of power play. John, you've talked before about the Geneva Truce and how these diplomatic gestures can be more symbolic than substantive. How does that fit into what we're seeing now?
Yeah, the Geneva Truce is a perfect example. On the surface, you get these warm words, handshakes, statements about cooperation, but underneath, the real action is in the asset markets. The Treasury sell-off undercuts any illusion that a truce equals trust. Growing up in diplomatic circles, I saw this all the time. You'd have these uneasy truces, but the deeper fractures, the stuff that really matters, never got addressed. It's like patching a cracked dam with duct tape. The water's still pushing, and eventually something's got to give.
So the detachment isn't just economic, it's existential. Trade and finance, once joined at the hip, are now drifting apart. Washington's busy with industrial policy, Beijing's chasing financial independence. It's a slow-motion uncoupling, and the world's watching to see who blinks first. And honestly, the markets aren't waiting for the diplomats to catch up. They're already pricing in the new reality.
It reminds me of what we discussed in our episode on trade policy shifts, how markets and consumer habits adapt, sometimes faster than policymakers realise. Here, it's the same story, just on a much bigger stage. The signals are out there if you know where to look.
Exactly. And China's moves are both tactical, managing currency, hedging risk, and strategic, declaring autonomy. Its financial policy as diplomacy, the handshake in Geneva is nice, but the real conversation is happening in the bond market. So
Let's talk about the new rules of the game. Financial policy isn't just about numbers anymore. It's a tool of statecraft. Washington and Beijing are both wielding it, sometimes like a scalpel, sometimes like a sledgehammer. The frameworks at play, the Triffin dilemma, the political economy of hegemony, safe asset fragmentation. They're not just academic jargon. They're shaping the risks and the choices on the table.
right, the Triffin dilemma is a classic. The world needs dollar liquidity, but the cost is that countries like China end up overexposed to US treasuries. It's a paradox, one that's now coming home to roost. And then you've got the political economy angle. The dollar's dominance is both a blessing and a burden. China's retreat is a kind of pressured dismantling of that system. And with safe asset fragmentation, we're looking at a future where there isn't just one safe place to park your money. That's a big deal.
So, what does that future look like if China keeps reducing its treasury holdings? Can they do it without causing global fallout? Is the Geneva Truce just shadow puppetry, or is there substance behind the smiles? And if US yields rise, does that force Beijing to reverse course, or is it already too late for that?
Maybe we're heading for a world of alternative networks, new reserve architectures, parallel systems. Or maybe the status quo limps along, patched up by G20 accords and central bank interventions. But the old certainties are gone. The question isn't just, can the system hold? It's, what does holding even mean when the ground keeps shifting?
And that's the real story. China's retreat from treasuries, even during a so-called truce, is a signal that the realignment is already underway. It's not about tariffs or trade spats. It's about who gets to write the rules of global finance. The handshake is nice for the cameras, but the markets are telling a different story.
And that's where we'll leave it for today. The financial Cold War isn't just a headline. It's a living, breathing shift in how power is brokered. We'll be watching, and we'll be back to unpack what comes next. John, Eden, thank you both for your insights, and to everyone listening, keep questioning, keep reflecting. Until next time.
Thanks, Nikki. Eden, always a pleasure. See you all on the next one.
Good night, you beautiful skeptics. Don't let the shadow puppets fool you. Until next time.